Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Monday, May 15th, 2017, and this is the Daily Report for Gold and Silver. We have modest gains in gold and substantial gains in silver. Precious metal complex as a whole closing higher on the day, now for the fourth and fifth consecutive day, depending on which market we look at. Over to gold futures, currently trading up about $2.40, $2.50, a net change of about 0.2% at 1230.10, $1,230.10. It has traded to a low of 1226.80 on the day, and the high has been 37.40. So as you can see, we're kind of in the mid-range of the trading range today. Over to spot. Spot also trading higher on the day at 1230 and change. Net change about the same, as well as a percentage gain. Now, silver futures did a lot better than that, closing up about 1 1/3%. A 22-cent gain to close at 1662. The low today is 1641 with a high of 1681. Of course, we have long positions in both gold and silver. We'll discuss them in detail when we pull up our first chart and begin to talk about our exit strategies today. So traders, on Thursday of last week, we did send out a recommendation to initiate long positions in both gold and silver. In terms of gold, entry price on this particular trade, $12.25. That's basis the June futures contract with stops below 12.10. So the first chart that we are going to look at today is a daily chart, Japanese average format, and we can really see the signs of a market bottoming that is quite evident after a defined downtrend. Of course, we notice that the candle size on this Japanese average begin to diminish, they begin to contract. We get our pivotal or doji candle. This is our final red, and then we convert over to our green candles. A very, very strong indication that we have in fact seen the conclusion of the most recent sell-off and that we'll move to higher pricing. There are occasions, of course, when you'll get a pivot and that pivot will be short-term, but as a whole, you can see we go straight red here, pretty much straight green except for this candle. Here's a small correction, red, green. This is that sideways action that I'm talking about. It does occur sometimes, but as a rule of thumb, when we look at the Japanese average chart, aside from some sideways trading that you might get in some of the trading, for the majority, you've got clear and defined short-term trends in the market, and we certainly have every indication of that. Which brings us to our daily candlestick chart. That's the chart that I've just pulled up now. We can absolutely see that we've got really a rounded kind of a bottom here, no doubt about that. At the same time, in terms of different levels of support and resistance, we obviously have good support just above 1210. Our stop is below 1210. We're going to keep our stop for right now at that price point. In terms of different areas of resistance, I draw your attention to a series of congestion right in here. And if we carry that over, a series of support where it's sideways right in here, which is at 1240. That, of course, falls below the 200-day and 50-day moving averages. Those are right here. And so my sense is that we'll see this market take a play at least for 1240. I would expect it to move towards the 200-day and 50-day, 50-day in blue on this particular chart, 200-day in red. And so ultimately, I'm looking for, in terms of initial exit strategy, if the market does continue to rise throughout the week, does go over, call it 1240, I would look for a minimum of 1260. I believe, depending on what we see this week, it could go substantially higher than that, maybe even testing the 1300 again. But first, we've got a couple of small little areas of resistance that we have to see the market climb through and above. So traders, on Thursday of last week, we also made a recommendation to go long silver. We got long at 1632. Market is at 1661. So obviously we've seen a much greater percentage gain on our silver trade than our gold, but that is very typical of the market when it moves up. Silver tends to outperform gold in terms of percentage gains, but it also has greater percentage drawdowns as the market moves down. Our different levels that we're looking at in terms of support and resistance. The first thing is we have that rounded bottom that we had in gold that's quite evident in our silver chart. You can see that we have a 61% retracement that comes up at 1684. And that, of course, is a shorter term fib retracement that accounts for the entire range this year, from highs at about 1860 and lows at about 1570. When we do that, this is our first level. Our next level is just above 17 at 1713, which I believe is a very, very minor level, with the next major level at about 1750. So these are the different targets we want to look at in terms of our current silver trade. In other markets that we look at, U.S. equities did fare quite well today. Dow Jones Industrial Average closing up about 0.4%, an 85-point gain at 20,981. Standard & Poor's also closing up significantly higher, almost a 0.5% gain at 2402. So we've broken back above 2,400 ever so slightly by 2 points, but nonetheless, our reading is 24. And the NASDAQ also did well today at 6148. And by the way, that is a new all-time record close. Noteworthy also is the U.S. dollar. Dollar under pressure today, off about 0.3% at 98.81. And we had crude oil spike higher today, up about 2% at 48.80. Traders, a couple of markets that we want to look at rather quickly is crude oil as well as the dollar index. Both of them do affect both gold and silver pricing. Both of them have had key reversals, I believe, in the marketplace. In terms of crude oil had been selling off dramatically after trading to these highs at 54, came down and recently as about 2 weeks ago, touched at these lows at about $44 per barrel. But you can see we have seen this market have quite a resilient turnaround, currently trading at 48.78. That is our closing price right here. We also see a 200-day as well as a 50-day moving average. They are definitely converging. They are coming into alignment and coming together. And price point in crude oil is quickly approaching that particular point. Now, we did get highs that went into that range, but as you can see, it did close just slightly below that price point. It will be interesting to see on a technical basis whether this particular area, the 50 and 200-day moving average, end up amounting to any kind of real resistance in the market. And traders, lastly, do want to take a look at the U.S. dollar. A dollar now slipping for the third consecutive trading day in a row. Of course, that weaker dollar has contributed and provided some tailwinds to both gold and silver pricing as it moves higher. On Friday, we closed just at the longer-term 200-day moving average. That is this particular dashed red line. This is our shorter-term 50-day moving average. Today, we opened below both 50 and 200-day moving average and closed significantly below that. In terms of technical support on the dollar, I don't really see anything in the market on a major level of support coming in till about 97 on the dollar index. As I talked about in the chart section of today's show, I do believe that what we have witnessed over the last 4 or 5 days is an extremely oversold market, finding support and beginning to trade higher. In gold as well as silver, we talked about that rounded bottom, a pattern that emerged. If you recall from last week, we had a engulfing bullish in gold and a bullish harami in silver that both triggered or was partially responsible to triggering our signal today. Obviously, my recommendation is to maintain your current long position in both gold and silver, as well as your current stops. We will be looking to move those stops up tighter later on this week. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.